What's up, my crypto legends? In this episode, I have Nathalie from Bitcoinsensus. Some of the community might know Nathalie. If you do not know, make sure to check her channel out, okay? She's got excellent technical analysis. And in this episode, she's going to explain how to use Fibonacci strategies, okay? And she's going to take the Bitcoin price out, okay? And show us on the chart what different strategies you can use with Fibonacci. Nathalie, how are you doing, first of all?
I'm really good. I'm really good. How are you, Andy?
I'm doing great. Great to have you on the channel. So yeah, if you could share the chart and show us this strategy on Bitcoin, that would be absolutely great.
Yes. So I have been using Fibonacci for a long time, and it was actually that helped me to see the market in a whole different way. So first, I just want to show you how to use it on a uptrend. So I always take it from the higher low that we're having to the higher high. And Fibonacci is a tool that we're using to see where the market can come back down to in the pullback, and then we just might see the continuation. And when I'm taking it from when it's a downtrend, I always take it from the highest point, so that's the lower high to the lower low. And so I'm going to show you how it looks, and you can use it on every time frame, but the higher time frame, obviously it's more respected. But we can go to the weekly. So I'm going to show you how it looks on Bitcoin. So I took the Fibonacci. I can do it again. I took it from the lowest point that we did have here, and I took it to the highest point that we did have. And this was when a lot of people was in panic and didn't understand that the market was just having a pullback, but it had it on the weekly. So if you're just trading on the lower time frames, obviously it's going to seem like the market's going down forever. So I was looking and I was talking about this area right here that we had on the, and I always use the 50 and 61% on the Fibonacci to see if the market retraces from that area.
Okay.
So we could see the market came down here with wicks on the weekly. But then we could go down to the daily just to see more clear how it actually looks. So we did have so this is the downtrend that we're having. And you could see that the market did come back down to the 50, it did respect the 50% more than it did on the 61%. You can see that we're almost hit the 61%. Yes. So, and you can, even in a downtrend like this, you can use the Fibonacci. Just take it from the highest point, as I told you in the first, told you the first time. Yeah. You take it from the highest point to the lowest point, and you can see that we almost came to the 50%. Sometimes the market doesn't come to the area. So, this is just a confirmation.
Yeah, we just touched it there, actually, just with a wick, I can see.
Yes.
What about the 38? Sorry, Nathalie, what about the 38% levels? You don't hardly use them?
I don't use them, actually. I only use the 61 and the 50%.
Yeah, I have it on the Fibonacci tool, but it's like a very aggressive entry point. If you enter at 38, you are risking that the price is going to come lower, and are your emotions going to handle that loss while you get into that trade? So yeah, it was just a quick question about it.
Yeah, and most of the time, when you have been using certain tools, you can see that the market's respecting the 50% more. So if you're having a buy or sell limit at 61, usually the market just, if you're lucky, you're having your entry on the wick, because it just comes there and then it goes back down. So the 50%, what I know, it's more respected, but I like to use the 61% because I want to have the highest or the lowest price as possible.
Yeah, it's the conservative price. Yeah. I missed out on this pump from BTC from the low $40,000 because 62% wasn't reached, and I knew we were going up. I would say we had the descending wedge. It is very likely we're going to break out, but I was waiting for that last little dip to $38,000, approximately, just above that, and we didn't reach it, so missed out. But
yeah, it can be really annoying when you're seeing it's like the market could have just moved a little bit more, and then it would just
would have got into that trade. But anyway, this is trading. It is what it is. If you want to be aggressive, you get up above 50% levels of Fibonacci, for example. If you want to be conservative, then you wait for that 62%, I guess.
Exactly. Yeah. And this is one thing too on the daily. You can take you had the lower low, you had the lower high. And when you saw the market coming up again, you could actually take the Fibonacci from the high to the low, You can see now that the market actually came to the 50% one more time.
Yeah.
So the higher time frame obviously is better, because you can see after that, you can just go down to the lower time frames and see, okay, is it the market actually continuing to the upside, or it's actually breaking to the downside? So I'm going to show you how that looks. So have in mind that we are right now at the 50%, and we're going down to the lower time frames. And so this is what happened, as you could see on the daily. But right now, we have to focus on how the price is moving. And we could see that the market actually created a support around the 50% Fibonacci level that I did have. And so the question will be, is this the new support? Is the market now gonna break into for an uptrend? And you can see that we did have, I mean, this is pretty hard, or also because we're just moving sideways, so it's very easy to lose money in this. But when you're having the 50% as a confirmation that the market is actually respecting it very much, it's easier for us to understand why the market now continues to the upside.
Yeah, as it holds.
And you can see, sorry?
As it holds that support, you mean, yeah?
Yes, exactly. And we could see that we do have huge wicks telling us it's yeah, whatever, you don't have to take that with us. You don't have to take that with the video. But you can look at the 4 hour, you could see that the market actually never broke the previous low that we did have. And if we're going back down to the lower time frames, this is how it looks when we have just been consolidated. So this is why it's really easy losing money in a market moving sideways. It's easier to take, maybe it's easier to scalp from the support to the resistance, but you can use the Fibonacci. I'm going to show you on the lower time frames. If you're taking it now on the 1 hour chart, you take it from the low, you take it from the high, and how you can see how the market comes back down and retest it. So it's on the second touch that I'm taking my entry.
Okay.
Because I want to see if the market still will respect that zone.
All right, to see if it holds that support and for the second bounce, right?
Exactly. If you want to be aggressive, you can take it on the first two, but obviously if you have a second confirmation that is respecting it, it's a safer trade to take.
Right.
Yes. So, and you could also see when the market broke, you broke the trend line that we did have. You could also see that even if we're on the 1 hour, you can see that we did retest the previous lower high that we did have on right here. But obviously when you're going down in time frames, that's how you spot these breakout retests. So if we are looking right now what the market is doing, if we're gonna take, I'm gonna take it on, you can do it like this. So on these levels that I'm having, you're having the 23, the 75, the 1.2. This could also be very good for people using it as targets, as take profits.
Okay.
So if we're using the Fibonacci on the weekly, the highest take profit that we can have is around 76,000. Obviously, it's going to take a lot of time before the market comes to that area. But I definitely see we can come to 1.23 because that's going to be the target that we're having our higher high.
0.23, right? You mean?
Yeah, exactly.
So this is getting the Fibonacci from the low part of the summer, which is just below $40,000, 30,000, sorry, around about 30,000 to the swing high, which is 52K. And that gives you the possible targets from the next impulse, right?
Exactly. And you can also use it on the lower time frames. So for example, if we're taking it on the, let's see, if we're just taking it on the 4 hour chart, even if the market breaks, you have to see if the market's going to close above the previous high low that we're having. And if I took a buy order around the Fibonacci levels, I could have used these as my targets. If you don't know how to use targets from the chart, it's a very easy way to do that. Using
the Fibonacci. Okay.
Yeah.
So I guess your stop loss would be below the actual low part, right?
Exactly. Exactly. So if I'm having it like this, you're having your stop loss right under. If we are looking at the 4 hour right now on Bitcoin, we can take the Fibonacci from the low that we're having right here to the high. And if the market comes back down here, it's just the same thing. We want to see if the market comes back down and retest it. And then if we're having a leg,
starting to have a leg up from the second bounce, right?
The first leg. Exactly. So you're having your second bounce, you're having your second confirmation that the market is actually respecting the 61% or the 50, depending on where the market closes. And then you just might see the continuation.
So you like to wait for that second bounce. As soon as you're having that second bounce, you would probably enter the trade there, right? For the
yes, exactly.
All right.
Exactly. And when you're going down to the lower time frames, let's say to the 15 minutes, and you can also take it, you can also take the Fibonacci on this. If you're going to the higher time frames and you see your order on the wick, that's because you took the Fibonacci, or I took the Fibonacci from the lower time frames, because I'm just puzzling everything together. So for me, sorry.
Yeah, go on. Sorry.
No, for me, it's very easy to use Fibonacci, but obviously you have to sit with the charts. You have to use different high, low. So you have to get used to it and how the market is working.
Yeah, exactly. Like you said, also when you have that bounce to the 50% levels, if you want to enter on the first bounce, then you are risking that maybe it's not going to hold, and you on the second bounce you're going to actually break and come back down and do that kind of inverted V-shaped recovery and continue to the downside and hitting your stop loss. So you need to practice a lot and wait for those second bounces, potentially on the 50 or 62% levels, before you enter a trade potentially. So I guess there's a lot of practice behind it also.
Yes, and obviously you always have to, as you said, you always have to look how the candlestick is actually going against. If I'm in an uptrend and I'm taking the Fibonacci to look for a buy, and you'll have a bearish candle just going through it, obviously that Fibonacci level is not something that I'm going to use.
Yeah.
So it's a lot of things that you have to look for, but the Fibonacci is very good if you're using it the right way. But that comes with experience. But it's definitely one of the things that made me change my way trading.
Great, that's fantastic. Yeah, I know it's a great tool, and if you know how to use it properly, it's a great tool on how to make money, especially in the crypto space, which is very volatile. I'm going to ask you one more question, Natalie, about the Bitcoin price has been pumping like crazy the last couple of days. I've been waiting, I've been talking to my community in the Telegram group, waiting for that retracement, and the retracement is not coming. It's just pumping and pumping and pumping. Where do you think? Yeah, it's crazy. Where do you think we're going to continue up? Okay, like if you use the Fibonacci tools, on the daily or on the 4 hourly, where do you see this pump? Is it going to continue? Or are we going to have that retracement? What possible retracement can we find as a level before we start continuing to the upside? So just let me know what is your opinion on the next coming days for Bitcoin?
Okay, so I think we always have to have multiple how do you say it?
Yeah, options, I guess. No.
Yeah, exactly. So if we are seeing the market continue now having its pullback, we can take the Fibonacci from the low that we did have here, and you having, obviously we need to see if during the day if the market's actually going to have a bearish candlestick. So, but if the market closes with a bearish candlestick, we could potentially see the market coming back down to the 50 and 61% area here, and that's around 15 and 51,000.
Yeah, I think that's also a good level. With my community, I was expecting, in between 48 and 50, $51,000 maybe, to be conservative, maybe a correction to those levels.
Yeah, and if the market breaks the Fibonacci level, we can definitely use this support that we're having. If we don't even have to care about the Fibonacci, but the market can come back down to the support and still be in a uptrend.
Yeah, because looking at the daily chart now, you could see all of this being an impulse since the 30th of September, since the low $40,000 range. There's so many green candles here. There's like 7. We only see that little small red one, but all of that could be an impulse, right? And you can take Fibonacci from the low, I guess.
Yeah, and you can also see that combines with the previous lower high that we did have, and the market broke it.
Yeah.
So it's a strong level. We can also go back in time and see that the market has been here as a support before also. So I mean, it's a strong level where the market can be drawn to, and then we might see the continuation. It doesn't have to just come back down and then go straight up. It might just look something like this for a couple of days.
I think that this is the market. They trick the people. They might wick down below that level, thinking that we are going to break it and continue down, and then you have that bounce. So
yes,
this is what happened exactly at the end of September. I was waiting for that 38,000. You know, this is going to drop. This is going to drop. And when you're so conservative and waiting for that last drop, the market suddenly goes the other way. And
yeah. And if you're not looking at the bigger picture, like on the daily, and you're just going to the smaller time frames, you have no clue where the market actually is going. So if you're having panic for the market actually doing what it's supposed to do, it's so much easier for people to use the higher time frames. Just to see where the price can come to.
Yeah, the direction and the possible retracements is much better. Yeah, when there's a lot of noise, because on the 1 hourly or even the 4 hourly, this in crypto or Bitcoin, there's a lot of noise, a lot of wicks, a lot of candles up, down. You just need to zoom out a little bit to know the actual direction and the possible retracements.
Just gonna show you. I mean, even on the weekly, you can see how clear this is.
Yeah,
it looks beautiful. But if you're going down to the 1 hour and it looks like this, you can even go to the 15 minutes and you're looking at, oh my God, what's happening right here? You have no clue on what's going on. So it's
when in doubt, zoom out, they say.
Exactly. And then you'll have a better understanding on what's going on, and it's easier for you to trade.
Yeah, exactly. Nathalie, thank you very much. Anything you want to say to my community?
I hope everyone liked this video. I hope you understood what I was talking about.
Absolutely. Yeah, her link is down below in the description, guys, by the way. Nathalie Bitcoinsensus, make sure to check it out. She does daily updates also on Bitcoin and cryptos. So Nathalie, thank you very much, and I hope I'll see you in the next interview.
Yes, me too. Have a good day. Bye.